What up, YouTube? We're up and ready. Let's do this. I think my SPY froze because I'm not getting any data on SPY. Yeah, big green on ES there. There we go. Now we're good. All right, so there is the data. Let's see what happens. It's 1 o'clock, 2 o'clock Eastern. What do we get? What do we get? Big red candle. Where's it going to go? Down to S1. That's the first candle. It's going to be wicked up. Now it's kind of staying put. It's staying put. I am going to bring them up. So I'm going to bring up 3,800, 3740s. Wow, big green. Wow. Crazy. So we're already at 3,800. We're already at 3,800. Remember, that doesn't mean anything. The first candle is usually a fake out. No, I'll tell you when I take it. I'll tell you when I take it. All right, so big red now on the top. Where's the IV? So IV's come off a little bit. It's come off 10%, so it's continuing to drop. That's good. I think I might go ahead and take it. So June 15th, where are we at? 37.61. I'm going to go 3,800s. Yeah, IV's continuing to drop. Not much, but dropping. And then we're going to go down to 37.40s. Sorry, I'm not monitoring the YouTube chat right now. 37.40, 3,800. Now we're dead flat on the price action, so that would have eroded our strangles a little bit. My straddles I have entered are doing well. They're doing fine right now. They're both about breaking even. That's just fine. I'm just monitoring IV and seeing what I'm going to enter. IV's coming off just a little bit, 10%. Big wick on either side. VIX is hugely green. And we are dead flat right now. Dead flat. Big top wick, big bottom wick. I've got 3,800s, 3740s open, calls puts. On June 15th, I'm monitoring IV. Now it's back up to 142, 143. Now remember, we could sit here and do this for another half hour until he starts talking. So he's hiking 75. Yeah, the VIX 32.6, absolutely beast mode. He's hiking 75. And we're still dead flat. We're not moving yet. IV's come off a little bit. Cut it. No, no. We just opened the straddle. We ain't closing anything. I'm telling you, this did it. This is what happens. I've been prepping y'all for 2 days on this. Be patient. 230's coming. 230's coming. No, do not do a short strangle. 376.41. I've got 3,800, 3740s up and ready. It did this. I remember we talked about this last FOMC. Wait. All right, red's starting to come off. Big red candles here. They're starting to yabber on about the FOMC here. We've got 138 IV now. Down to S2. If after 230 we're still pinned, then you could start worrying. Until then, just hang on. Just be patient. I'm telling you, my last straddle last year, or last in May, was down like 27%. And then the movement came, bam. So I've got the entry pre-typed. So I promise you, the second I enter, I will hit enter and send you a notification. I've got 36.90 on them right now. Calls and puts. Puts are way more priced than the calls. So we're now down to S2. The straddles are still, that I did take, are still break even. There's no movement on them right now. IV's come off just a little bit, but that's a big old move right there. Coming down, new low of the day, down through S2. I think we're coming on down. There's 374.43. I'm going to go ahead and start legging into this thing. Let's see, 37.80. Wow, coming on down. All right, what's that doing right there? Good, good, good. Big top, bottom wick, bottom wick. That's fine by me. 37.80s. I'm being quiet right now because I'm managing. There's a lot going on right now. 37.80s. We're already 37.49, so I'm going to drop these down to 37.10s. All right, look at that big old bottom wick. Straddles are still break even. They're still dead flat, 1%. That's fine. VIX came back off. We had a big old bottom wick on that red candle. This is what I'm expecting here. I'm waiting until the 230 here. I'm trying to be as patient as possible until that 230 move. Avoid as much as I can of theta and IV. Bottom wick, patience. I will tell y'all the second I enter. So just chill. 37.50, I'm going 37. Right now I've got 37.80, 37.10s pulled up. They're about the same exact premium. They're within 30 cents of each other on the premiums. If you're doing SPY, do 378, 371s. 378, 371. Look at that, big green. So we know they're hiking 75. We know they're hiking 75. Now what's he going to do and come out and say? They're going to start reducing rates in 2024. The 10-year Treasury yields rise to 3.4. All right. Big green candle, right back. Oh, yeah, I forgot about Bookmap. See? I'm sitting there holding my breath looking at this stuff. So there's a whole bunch of liquidity at 38.37. That's been there all day, though. They haven't wiped anything yet. They got 3,700 on here, too. 3780s and 3710s is what I'm doing. That's 378 and 371s on SPY. Top wick red. Top wick red. These premiums are exactly the same price right now. Literally, they're within like 10 cents of each other. Bring me a higher love. Oh. All right, IV is dropping a little bit. Now it's 132. It was 149. So IV has come off a touch. And green right back. They did this exact thing. So just be patient. Last time in May, they did this exact thing. Everyone's like, should I close? Should I close? Should I close? I'm down 20%. I'm like, no. Wait till 2:30. Yeah. Wait till 2:30. We've got 19 minutes. I'm doing a limit order. Limit order. I'm not in a play yet. I will notify you all when I'm in a play. I promise. I promise. Don't forget to breathe. Yeah, buddy. The straddles I took are down 3%, 2%, so they're down. They're flat. That's fine. I can live with that. Came back from the bathroom. Yeah, little Steve Winwood, baby. Yeah. Pretty sure that was a #1 song on the radio in the year I was born. I wish we could. Yeah. I wish I could have a message that displays the whole time and I'll adjust it when I'm in a position or something like that. It's going to be Christmas time and people are still asking me if I'm in Neo. Bullish bear. Because we're still waiting for the move. Am I a pilot? I can fly. I'm a pilot. We are dead flat. Dead flat. I'm not sure what we're doing. They just hiked 75, which in normal circumstances we would tank the market. But we are down to 37.62. I'm inclined to think we're going down. I just think we're waiting for JPOW to come out. So remember last FOMC we did this crap and then we rallied 157 points. We did this right here. We chopped sideways and then rallied 157 points. Everyone was complaining at me for taking a strangle and losing 20%, and then all of a sudden, I was the best thing since sliced bread. So, patience, grasshopper. Yeah, VIX is hanging out. 30.54. I'm probably going to go ahead and take at least the first position right before he starts talking, like literally at 2:30, because once the move, like the candles are insane. Once they start being made, they'll be made. They'll be made. Straddle. Strangle. Strangle. Well, what I intend to do is enter the strangle and then play individual legs. So I'm going to enter the strangle. I'll immediately go into the options chain. I'll immediately go into the options chain and figure out the long, then go back to just normal play. I'll leave the strangle alone, and I'll go back to playing regular options, long puts, whichever we see. So. Why do you think the big moves don't happen until 2:30? Everyone knows what happened. Well, it's a lot of things. You know, if J Powell starts coming out, he gets asked questions, and then people start reading into what he's saying. There's forward looking, what he thinks is going to happen, what is actually going to happen, in there. So it all depends on what he says, and then the IV is going to come off, or the option the orders are going to hit, and we're going to make the move. What are the chances we stay flat? I would say pretty low. I would say pretty low. So there's the green right back, and just chopping. We're just chopping. Here's what's going to happen. We're either going to have the VIX come off very aggressively, and we're going to frickin' rock it, or the VIX is going to spike to 35, 36, and we're going down to the mid 3600s, if not lower. You entered a strangle too early. Should I wait? Yep. Last year, in May, I entered the position before 2 o'clock, and I had to hold through 25% loss until it finally moved. Nice, troglodyte. Overall loss, 25% overall. Deep breaths. Breathe, breathe, breathe. Watch live, June 15th, 2022, 2:30 p.m. Eastern Time. I've got 3780s, 3710s right now. 3780s, 3710s. I'm going to adjust them up to 3790s and 3720 and just kind of bootleg these around until I get a closer premium. I'll go to 37.30s. Yeah, so I'm going to do 37.90.30 right now. 37.90, 37.30. So what I'm going to do, the call out is not going to have the strikes because these things are changing rapidly. I'm just going to say I'm entering triangle, and it is what it is. Yes, 0. Yeah, Patient Purple, do you enter the trade? Yes, Bookmap is useful. Now, keep an eye on Bookmap, and we talked about this again in our conversations with Tier 2. Be ready to watch the Bookmap. You all remember what we talked about, what to look for. Good, Patient Purple. Yeah. I'm very curious. PCS and CCS is filled. Good. Hey, y'all are going to be fine. Y'all are going to be fine. Just chill. I promise. Chillax, bro. Chillax. I hope so. Watch, my screen's going to be delivered just when this thing starts. Listening to the smooth sounds of OM voice, you're joining us for the afternoon. Let the sound of the voice serenade your ears. Oh my gosh. I think I should add that word to the bot. Oh man, Bob. You're not going to be able to pay attention. Leave it on the ground, yeah. Yeah, my office is literally like 5 feet from my front door, so I can hear him like walk up there. I'm just going to open the window and be like, hey, leave it there. Yeah, I mean, that's pretty close to what I'm playing. 379, 373. Y'all play what you're comfortable with. Like, don't follow just me. You know, you get the gist of it. Be smart. Trade what's within your risk tolerances. You know, do your thing. The 379s and 373s are basically the same price right now. So far, I'm very happy with waiting. We did this from last year. Either way, you're going to be okay. You're going to be okay. Just, you know, ask yourself, you know, you just want to remember one thing. And that is, don't go chasing waterfalls. You just want to stick to the rivers that you're used to. You're very welcome, Dallin. Very welcome. Little 90s for you. Little 90s for you. Can you ban me before I go to work? So a big old red candle down to S2. Looking beautimous. And he's getting ready to talk. IV has dropped down to 133, so that's 13% off where it was. 14% off where it was. That's good. A little bit less. Still high, but better. Better. I got jokes. My age is showing. Yeah. I know. I love 90s music. 90s music was the best era, both for R&B, hip-hop, rock, grunge, country, everything. 90s was the best era for music. You put up against little Tupac next to any of this crap we hear today, not even the same. Even if you don't like hip-hop, you could still appreciate some Pac, man. That dude could sling it. Limp Bizkit, oh yeah. Yep, we're doing 0 DTE. Biggie, uh-oh. I like me some Biggie. My brother was a Biggie guy. He liked Biggie. Pearl Jam. I love me some Pearl Jam. 90s country hits, man. You can't beat 90s country. Spice Girls, yeah. Can you call out periodically what strikes you're looking at? Yes. Right now, I've got 37.90s, 37.30s. Up right now. 37.90s, 37.30s. Yeah, better. Good dude. Yes, I am. In fact, I'm going to go ahead and take that position. That's a good. Thank you for reminding me. 37. Let's see. Man, I'm doing this math out of my head. 38 30s calls, and then 3700s. Yeah, I'm going to do 36 90s. Entered. That is entered. 30. What did I take there? 38 30s, 36 90s. Very, very small micro position size. I took that. Now I'm going back and taking the normal position, which is what I was just talking about. 37 90s and then 37 20s. Is that what I said? I don't know, man. I'm all over the place. No. Yeah, that's right. That's right. So 37 90, 37 20s. Sorry, I'm not tracking y'all on YouTube. You're gonna have to bear with me. I've got a lot going on at the moment. Could have been Mohammed. Yeah, that's a good good catch there. So I'm listening to the FOMC's elevator music, and it's calming, oddly, considering what's about to happen. Yes, all the plays I posted in day trades. So he's going to start talking here in about 3 minutes. I'm probably going to go ahead and start putting positions on here right before he talks. IV really hasn't stopped any. I'm just, now at this point, I'm just minimizing theta because the IV is really not coming off too much, which I didn't expect to. The move hasn't been made yet. I'm not going to take the 1 DTE until the closing bell, right before the bell. And even if I might not even take that play. Yeah, so what I'm going to do, that's a good call, Bob. I'm going to put on slow mode on the channel. Just because it's going to get crazy. Just a little bit, just to delay y'all. 5-second slow mode. I took the long stuff. Here, I took that. I need to post that, yeah. Entered the, what did I take? 38.50. 36.90, 38.30. Yep, all zeros. Right now, everything is zeros until otherwise stated. Everything's zeros right now. I'm not taking any ones until the very last couple minutes of the day. Like, literally, the close of the bell. No, I mean, it's way the heck outside the money, Alex. Like, way the heck. So that's like micro position just to see if I can get a big win. So, all right, it's 129, 229. Yep, everything is for zero. Everything is for zero. Zero DTE. A firm. A firm. Am I long or short? I'm about 6 foot tall. All right, coming down to S2, 374.89. We got 37.50 coming on down. We got a little liquidity above, a little liquidity below on the book map. I'm going to give you a good indication right here of what the book map's looking like. Right there. Oh, it's quiet. Does that mean he's talking? Oh, here he comes. I'm putting it on right now. Uh-oh. Uh-oh. All right, I'm in the 3790s, 3720s. Yeah. I'm already up 10%. Thirty-seven twenty. 3720. Big red. I'm kind of being quiet listening. That long dated triangle is up 50% already. Big red candles. Wow. Haven't closed anything yet. If 3700 gets broken, we'll go down to 3625, 3650. Liquidity is being put on lower. Take profits as needed. The move hasn't been made yet. I'm not cutting anything yet. This could go right back up to highs. Come on. Tank it. Big green. See? Don't close anything yet. Here we go. Listen. They're building 36.25. God. Where are they going to move this thing to? Come on. The anticipation is freaking intoxicating. Big green. Whew, big old green. Ooh. Big green. All right, so all my straddles are flat. All right, questions. Here we go. VIX is dropping. Look at this. I am green 12%. Oh, come on, go. Pick a direction and go. Come on. That's a 100-point candle right there.
That's not where we are with this. So we decided we need to go ahead, and so we did. And that's really how we made the decision.
All right, 38.15.
Thanks for taking our question. Gina Smollett with the New York Times. I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today. What did 75 achieve that 50 wouldn't have? And
All
what
liquidity on below got
happens
pulled.
at some point?
Now they put on 39.12.
So if you take a step back, what we're looking for is compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining monthly inflation readings. That's what we're looking for. And by this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago.
My strangle's up 100. The call's up 130%. The put's down 83%, and I'm up 17.4% on them.
Inflation expectations have risen, and projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point
Yeah, it's a good point, Dave.
hike, as I mentioned. So
If your losing leg is basically worthless, keep it just in case we reverse.
we
It
could move
protects you.
rates up expeditiously to more normal levels. And over the course of the 7 months since we
Come on, pick your direction and go.
began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move, is at 1.6%. So again, the committee is moving rates up expeditiously to more normal levels, and we came to the view that we'd like to do a little more front-end loading on that. So I think that the S&P gives you the levels that people think are appropriate at given points in time. This was really about the speed with which you would get there. So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, you know, in that range, in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward.
Everybody should be nice and green right now.
S&P for a second. What it really says is that committee participants widely would like to see
Come
policy
on.
at a modestly restricted level at the end of this year, and that's 6 months from now. And so much data and so much can happen. So remember how highly uncertain this is. But so that is generally a range of 3 to 3.5%. That's where people are, and that's what they want to see, knowing what they know now and understanding that we need to show resolve, but also be
Come
focused
on, we got to
on
squeeze.
data as we see it. If things are better, we don't need to do that much. And if they're not, then we either do that much or possibly even more. But in any case, it will be very data dependent. Then you're looking at next year, and what you're seeing is people see a bit more tightening in a range of maybe 3.5 to 4%, and that's generally what people see as the
I think we're
best
going to 39.30.
for getting inflation under control and starting back down and then getting back down to 2%. So 75 basis points seemed like the right thing to do at this meeting, and
Yeah, my calls are down 94%, so I'm just holding them just in case we reverse. I'm sorry, the puts are down 94%. So I'm just going to hold them. I'm not closing out the losing leg.
thank you for taking my question, Mr. Chairman. You have not used the phrase in a long time, monetary policy is
But what I am going to do is open up the call side of my strangle,
now that the committee
just in case we decide to reverse.
or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market at 4% funds rate next year. Do you think that's a level
Oh,
that
come
is
on.
going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive, and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you. Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5 to 4%. And how do you think about that? Well, you can
No, I've got the call order form up and ready to sell it, just in case we reversed back down.
and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect you're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also
If we take out 30, 38, 37, we'll go to 38.50.
yield curve now, real rates are positive. That's not true at the short end. At the short end of the yield curve in the early years, you don't have you have negative rates still. So that really is one data point. It's one part of the financial conditions. So I
My
think
XLF straddles red 7%. My Apple straddles red 1%.
policy rate
My 3720's up 26%. It was up 50. That red killed it.
of course, rigorous ways to think about it, but ultimately it comes down to do we think financial conditions are in a place where they're having the desired effect on the economy? And that desired effect is we'd like to see, demand moderating. Demand is very hot still in the economy. We'd like to see
Big red candle.
better imbalance between supply and demand, and that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, uh, and those would be things the commodity price issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still pushing.
Man, I feel like he's talking forever. Just move the market.
That's really how I would think about it.
What would you say is the data points that you look at when bringing back inflation?
I think it's certainly in the range of plausible
Yeah,
numbers
liquidity's still higher.
when we get there. Honestly, that would be you would have positive real rates. I think an inflation coming down by then. I think you'd have positive real rates across the curve. Um, I think that the neutral rate is pretty low these days, so I would think it would. But you know what? We're gonna find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
Thanks. Nick Timros of the Wall Street Journal. Chirpel, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data. But I'm wondering on the inflation expectations data, was there something you
I
saw
got
that
30, 80,
was
51.
unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at we look at a broad range of inflation expectations. So you've got the public, you've got surveys of the public, you've got experts, and you've also got marketplace. And I think when you look across that broad
Yep,
range,
he's still talking.
what you see is that expectations are still in the place, very much in the place, where short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And also, as you get away from this episode, they get back down close to 2%. And so this is really very important to us that remain the case. And I think if you look for most measures, most of the time, that's what you see.
Nice, Swifty. Well done.
Even if you see a couple of indicators that bring that into question, we take that very seriously. We do not take this for granted. We take it very seriously. So the preliminary reading, it's a preliminary reading. It might be revised nonetheless. It was
Watching the book map.
eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the board has moved up after being pretty flat for a long time. So we're watching that, and we're thinking this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them anchored at 2%. That was one of the reasons. The other was just the CPI reading.
So if you saw a movement like that again, another tick up in inflation expectations, would that put a 75 or even 100 basis point increase in play at your next meeting?
I'll just say we're going to react to the incoming data and appropriately.
Ooh, tough question.
I wouldn't want to put a number on what that might be. The main thing is to get rates up,
Yep.
and then pretty soon we'll be in an area where we're. I think as you get closer to the end of the year, you're in a range where you've got restrictive policy, which is appropriate. 40-year highs in inflation. We'd
Big red candles.
The late-breaking kind of decision to go to 75 basis points, do you worry that that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation or
All right, calls got stopped out. 28.75. 26.75. I'm sorry. Still holding the puts.
provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. There's always a trade-off, because you have to live with that guidance, and so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. With us having really just done very little in the way of raising
Nice, Spider-Man.
interest rates, financial conditions have tightened quite significantly through the expectations channel, as we've made it clear what our plans are. So I think that's been a very healthy thing to be happening. So, and I would hope that it's always
I closed out my calls.
any guidance that we give is always going to be subject to,
So now it's seeing if it does tank all the way down,
and in this particular situation,
what happens on the puts.
we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause, even if we don't see progress for a longer period, that could cause us to react. But we will
And the puts are pretty much worthless, so that trade is pretty much out. But
we'll react appropriately to that too. But I would like to think though that our guidance is still credible, but it's always going to be conditional on what happens. This is an unusual situation to get, some data late during blackout, pretty close, very close to our meeting. Very unusual to one that would actually change the outcome. So I've always seen
yeah, it's your call for sure.
plus here at the Fed. I've only seen something like that, even close to that, one or two times. So I don't think it's something that will come up a great deal.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that?
Yeah, this is the flattest FOMC we've had so far.
Potential trade-off of much higher unemployment
Ever
than even
so far.
than even what's forecasted in the SEP if inflation is not moderating, at an acceptable pace.
The second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right.
TLT is dropping, bonds are dropping.
What we want to see is a series of declining monthly readings for inflation, and we'd like to see inflation headed down. So, but and right now our policy rate is well below neutral, right? So, soon enough we'll have our policy rate. Let's assume it holds worse about like the S&P says, the policy rate will be up where we think it should be, and then the question would be, do you slow down? Does it make you, you make these judgments about is it appropriate now to slow down from 50 to 25, let's say, or speed up? That's the kind of thinking that we'll be doing.
Huge red on the bonds.
Ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down.
All right, well, we're just hanging out here.
That's what it would take for us to say, okay, we think this job is done. Because we saw, frankly,
Man, he is talking a long time.
came down over the course of the summer and then turned right
Yep, yep, yep.
back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation it's going to require more than just some pain at this point?
Again, I think that I do think that
Nice. Nice, Damien. Well done.
their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that
Yeah, so this is definitely the net flattest FOMC we've ever had.
And there I'm
So
thinking
they
in
did it.
terms of
They did it.
commodity
We
prices
joked about it and they did it.
accelerating supply
Right
chain
now it's
disruptions.
377.90
We really can't
and we are dead
let
flat
monetary policy
to our
sit
price
idly
action
by
today.
as it doesn't affect those things. So, but having said that, there is a
Yep, that's how they get the most people.
there's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand. Take for example in the labor market. So
So things are starting to round over here. The puts are starting to pick up
prices
nicely.
essentially for every
Nicely.
person actively seeking a job, and that has led to a real
Now we'll see if we can gain on the other side.
negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to levels. People are still getting healthy wage increases, real wage increases, but
Coming into power hour.
consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So effectively you can think of an inverted supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher employment, not more cars, because they can't make the cars because there's no semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest because of the unusual situation we're in on the supply side. So there's a pathway there. It is not going to be easy, and again, it's our objective, but
I'm not sure if I'm going to hold the XLF and Apples. I'm not sure about those.
to say it's
We'll
going to
see how this price action acts. This is obviously very new for us for FOMCs. So I'm not sure what's going to happen if he hangs up and what happens in a power hour.
So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation?
Yeah, funnily enough, the credit spreads are going to be doing amazing right now.
so you're right. In the SEP, we have unemployment going up to 4. The median is 4.1%, but of course a range of actual forecasts. And I would characterize that if you were to get inflation down to on its way down to 2%, and the unemployment went up to where it went up to 4.1%, that's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50. So the idea that 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome. We don't seek to put people out of work. Of course, we never
Good job, John Taylor. That's all right.
fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting
And
wage
nothing's
increases
moving right now. Everything is pinned
before the pandemic.
at where we were before it started.
But
So
we anticipate
worst possible price action for us for straddles.
opportunities where
So
those
we're trying to, I've exited my calls, so I'm trying to manage the puts right now, which they're up a little bit from where I exited the calls. That's fine. So I'm trying to see where they're going to go. It's going into power hour. I don't know where they're going to go. Are they going to go to highs? Or they're going to go to lows? So,
but to get there,
so make sure you set stops. Make sure you manage the positions appropriately.
we have to restore that.
And this is why we talked about position sizing.
It really is in service
Nice, Ed. You're well done, buddy.
in the longer term of the kind of labor market we want and hope to achieve.
Hi, Chair Powell. Matthew Bosa with Bloomberg. So, as you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate in SEPs over the next so I'm wondering if you could explain why that line was removed from the statement.
Man, this is the longest he's talked.
This means that FOMC is trying to induce a recession now to bring inflation down.
We're not trying to induce a recession.
Yeah, no kidding.
Let's be clear about that. We're trying to achieve 2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that sentence. Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the S&P says.
Now they did this on CPI, and then they sold off big time on CPI. So right now they're pinning us right to 37.90. I'm not sure where they're going to take this from here. I don't know.
And as I mentioned, there are pathways to do it. But those pathways have become much
So
more challenging due to some
manage your positions appropriately. I'm down 11% on XLF and 8%, 7% on Apple. And right now I'm managing the puts. The micro position is down 50%, but that's why it's a micro position.
said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. The sentence isn't, it kind of says on its face that monetary policy alone can do this. And that just needs some focus to finish up.
Given the projections for the unemployment rate, could you talk a little bit about what accounts for such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues get worked out?
Well, yeah, I think we've seen, again, we've been expecting progress, and we didn't get that. We got sort of the opposite. So I also think the situation, really since the consequences of the Ukraine war become more and more clear, what you're seeing is the situation getting more difficult. I mean, look around the world. I mean, lots of countries are looking at inflation
Wow.
of 10%.
They're going to pin this thing right here. It is now power hour, and they're not even moving it. It's after FOMC, and it's pinned. It's crazy. It's crazy.
And we're seeing gas prices at all-time highs and things like that.
It's
That's
crazy.
something about. So
Made 0.5%. Nice, Martin.
and by the way,
Love it.
headline inflation is important for expectations. The public's expectations. Why would they be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future
Wow, he's talking. He's taking forever to talk.
what people experience.
God.
Core is, and why would they? They have no reason to. So
We need him to shut up so the market can forget about it and then move. Because this is the longest he's talked. He's talked for 35 minutes now.
the environment is becoming difficult, clearly, in the last
They probably have a guy they probably have like the hedge funds like in the corner just like looking at their watch saying, keep going. Keep going.
to get rates up and ultimately get them to where we think they need to be in coming months.
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talk about CPI going to 8.6%. The retail sales surprised the market by falling, and then revisions the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're of course watching very, very carefully for that, and looking at the retail sales, the big store numbers, and all that kind of thing. And so, but I think the fair summary of what we see is you see continuing shifts in consumption. You see some things getting the sales going down, but overall, spending is very strong. The consumer's in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels at healthy growth levels.
So then, as you are raising rates in this economy, how closely are you watching consumer spending, or is there another indicator that you're watching more closely?
It would be hard to watch anything much more closely than we watch consumer spending, but we watch everything. We watch business fixed investment, which actually has softened a bit, and we watch. We're responsible for
Volume is gone. Price action is gone.
spending. Consumption is
They're putting on liquidity back down to 3,700, but they're keeping the stuff up above, and we're just hanging out.
There's a lot going on. There are a lot of flows back and forth, but ultimately, it does appear that the U.S. economy is in a strong position and well positioned to deal with higher interest rates.
Thank you, Mr. Chairman. Mike McKee from Bloomberg Radio and Television.
Man, Purple's credit spreads play is going to turn out is going to backfire on us.
Inflation. In other words, how far would you chase oil prices if they keep going up? If that's going to be the component that drives expectations, would you risk recession for a headline rate if the core rate is holding steady or starting to go down?
So we're responsible for inflation in the law, and inflation means headline inflation. So
Man, he's still talking.
we, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's much better predictor of where inflation is going. It's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But the current situation is particularly difficult because of what I mentioned about expectations. We can't affect really. The energy prices are set by global commodity prices, and most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too, also other things. So we can't really have much of an effect, but we have to be mindful of the potential impact on inflation expectations from headlines. So it's a very difficult situation to be in.
Nope, I'm not taking another strangle. So if they're going to pin this on FOMC, then I'm not taking another strangle. So maybe we'll do another one before OPEX, but
Inserted into the record, were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is a one piece. It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that in hand when their SEPs were submitted. So in other words, it's not in addition to what's in the SEP. The SEP, everyone's SEP reflects their thinking about this rate increase and what's going forward.
Hi, Victoria Guida from Politico. I wanted to ask about how you're measuring progress, especially since you've now started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation.
yeah, I mean, it is what it is. This is what happens. This is the first time it's ever happened. So, I kind of had a spidey sense with everybody on Twitter talking about strangles. We talked about it, and look what happens. They pin it. You don't think they monitor this crap?
I guess my question is, do you think that inflation
Yeah.
inflation data will tell you when you've gone to where you need to go?
So my main position, I'm out of the calls. I'm trying to see if I could get some juice on these puts to make the position even better. These small positions I'm down on. I'm down 7% on the Apple. I'm down 11% on the XLF. I'm down 48% on the micro, way outside the money. But that's why I said micro.
With excess demand, and we'll be able to see our effect on, for example, job openings in real time. So, and that would tell us about wages. Wages are not principally responsible for the inflation.
I mean, even for a normal power hour, this is dead flat. For FOMC, this is just insane.
So,
He's going to talk until the bell.
sorry, I'm not sure I'm getting your question.
My question is inflation data itself the best indicator for when you're getting to where you need to go, or might it lead you to go too far?
There's always a risk of going too far or going not far enough, and it's going to be a very difficult judgment to make, or maybe
He does have a lot of spreads, yeah.
but we're quite mindful of the dangers. But I will say the worst mistake we could make would be to fail, which it's not an option. We have to restore price stability. We really do, because everything it's the bedrock of the economy. If you don't have price stability, the economy is really not going to work the way it's supposed to.
God, look at this action. This is awful. This is awful.
Expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very
Well,
likely.
this sucks, y'all. I hate this. Trust me, I hate this just as much as y'all do. You know, this was a highly anticipated event, and they're going to tank this. If it keeps falling, it's good for me, you know, but, you know, I just want this thing to pick a direction and go. If it goes back up, I'll put calls back on. If it falls, cool. We'll get the puts up. This is the first time I've lost money during FOMC so far. Yeah.
Clearly, people don't like inflation a lot, and many
Yeah,
people are
yeah.
experiencing it really for the first time because we haven't had anything like this kind of inflation in 40 years, and it's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways. And we understand that, and we understand the hardship that people are experiencing,
God, he's still talking.
and we're determined to do
Wow.
what we can to get inflation back down. So that's really what we're saying. We're not. I'm not. Clearly, it's an incredibly important
No, do not let the straddles go. If you are profitable on them, manage them, but do not let those go all the way to expiration.
I guess what I'm saying is the question, really critical question from the perspective of doing our job, is making sure that the public does have confidence that we have the tools and we'll use them and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
Thank you. Christopher Gaber at Associated Press. You have talked about inflation a few times and mentioned oil prices
Another question.
and trend
Wow.
line.
He's going to talk until the bell. So I'm about to close everything out here. I'm going to close this stuff out.
Commodity prices expectations. We're also seeing stickier measures of inflation
I'm not sure. I think I'm going to go ahead and close that out. Yeah.
Fed's median and trends mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect to, and where do you see those going in the near future?
So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. And in particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and
This
planes
is blowing my mind. Just seeing this price action on FOMC is blowing my mind. I mean, even for a normal day, this is dead flat, much less for FOMC.
shelter inflation is high. So
Yeah.
the question is,
Yeah, I mean, OPEX is supposed to be a big deal, but
those are going up,
yeah, position size. This is why we do position size. There's always risk. Always risk.
and that's really another part of why we did what we did today, and why the S&P looks like it does, is that we see it as appropriate to get the policy rate up to restrictive levels, which would be in the thinking of the committee somewhere in the range of 3 to 3.5% by year end, and I think
They didn't pin it down. They didn't pin it up. They pinned it flat. Because how do you screw the most amount of people that are positioned for a move? You pin it flat. They do it when the futures move overnight. They come back and they pin it flat at the open. When you want to screw the most amount of people, you pin it flat. They could have pinned it at 38.40. They could have pinned it at 37.20. Nope. They pinned it dead flat where the price action was all day. Because that's how you screw over the most amount of people.
I think what's in the S&P would certainly meet that test. If you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as
Yeah, but we've had priced in hikes the entire time. None of the hikes has been a surprise. It's been priced in the entire time. So I don't really buy into the priced in. I just think that this is the way they're going to melt the premiums, is by closing it flat.
and I do think it's possible. Like I said, though, I think that events of the last few months have raised a degree of difficulty, created great challenges, and again,
Yeah, this is the most amazing thing. He's going to talk until the bell, so the position that this price is going to pin into the bell. Yeah.
Now there's even more risk of a recession than a 50-50 path of rates. So could you talk a bit more about that and what evidence would get you to rate hikes and maybe even reverse them?
Sure. So, as I mentioned, financial conditions have tightened over the last 7 months, and that's a good thing, we think. But the federal funds rate, even after this
Yeah,
increase,
he knows.
is at
He knows.
1.6%. So it's hard to see how that is too high of a rate.
That's as flat as you can get flat right there.
Yeah, we're going to get here by the end of the summer somewhere in the twos probably. Still, that's still a low rate. So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data.
Yeah, the credit spreads are going to rake it in today. Rake it in.
Views are around a modestly restrictive stance, which would be in the 3.5% range by the end of this year. But that's conditioned on that being the appropriate thing to do. If we see data going in a different direction, it'll be reflected in our policy as we see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So again, we'll be determined and resolved, but flexible.
Kevin Reiser, Market News International. Thank you, Chef Powell. I was wondering if the Fed has initiated a review of the conduct of monetary policy over the last 2 years or so, given inflation, and will that be shared with the public? And then secondly, given all the
Yeah, it's possible. It's possible they can move it.
volatility in
That's what they did with CPI. Is they pinned it and then they moved it.
QT will make
The price action moved to CPI.
Sorry, what was your question on QT?
just given the illiquidity and extraordinary volatility in financial markets, whether QT will make things worse.
So, of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. It's hard to overstate
So they've got 3804 now.
the interest we have in that
A
question
little more green.
morning, noon, and night.
A little more green.
But you have to understand the context. Really the context is this: for decades before the pandemic and the reopening, you had a world where inflation was dominated by disinflationary forces such as declining population or aging demographics, let's call it that, globalization enabled by technology, other
So
factors, low productivity,
they're running out of time.
and
Running out of time.
that's how all the models work. It is decades and decades of data. They look at that as a very flat Phillips curve work, and the supply shocks tend to be transient. So we have now experienced an extraordinary series of shocks. If you think about it, the pandemic, the response,
VIX is still coming off pretty hard. 28.22. Nasdaq is nearing the upper bound of their range. SPY is nearing the upper bound of their range. You have R4, which is what 2 points above, but we can't break it. We're just top of weekend at the moment.
forces are driving the economy. We have been obviously for quite a while, but this is a different. These forces are different. Inflation's behaving differently, and
Volume is non-existent on the Nasdaq. It's dropped off completely, but the VIX is still plummeting, so that might drive us up if we continue to drop the VIX. Coming up on the Dirty 30,
supply side, which is there for
last 30 minutes of the day.
these blockages and shortages and people dropping out of the labor force and things like that. So that's how we're looking at it. And we've done a lot of work internally on and thinking about what all that means. The thing is, you don't know whether those forces are happening.
This is the longest he's ever talked on FOMC.
In other words, will we go back to a world where it looks a little more like the old world, or are we really going to be in a world where major supply shocks go on and on? The history is you see these waves of supply,
Man, the VIX is plummeting. 2808, still coming off.
and then you go away, and sort of there's a
So we're trying to break this range, R3, pin to R3.
inflationary forces are usually
Man, I thought I was going to have to put on an R7, R8, and R9, or an S6, 7, and 8, 9. But we can't even get over R4.
in fact, we're sort of in the middle of the pack. Although I think we have, of course, a different kind of inflation than other people have, and partly because our economy is stronger and more highly recovered. So that's what we're doing. We've done a lot of introspection and work on that. And sorry, on QT, we've communicated really clearly to the markets about what we're going to do.
We're trying to do something here. What's going on?
We're phasing in. Treasury issuance is down quite a lot from where it's been. So I have no reason to think markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
All right, looking at the book map, they've got 38, 32.
Wondered what your assessment is about the outlook for the housing market, given the years-long increase in home prices and now the sharp rise in mortgage rates, and all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial.
Coming up to R4.
Thank you. Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to.
So watching the book map, they've got 38, 20. They've got 38, 32 is on deck.
So, and that was rates are low, and now they're coming back up to more normal or above levels. So, in the meantime, while rates were low and while demand was really high,
Coming up.
so demand for housing
Coming up.
changed from willing to live in urban areas to some extent to living in single-family homes in the suburbs, famously, and so the demand was just suddenly much higher and low. So we saw prices moving up very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect?
Coming up 5 minutes till dirty 30.
Not really sure.
5 minutes till dirty 30.
Housing prices, not really sure. It's, obviously we're watching that quite carefully. You would think over time, so there's a tremendous amount of supply in the housing market of unfinished homes, and as those come online, whereas the supply of finished homes,
There's R4.
finished homes that are for sale is incredibly low.
There's R4. Can we break through R4?
Very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
First test of R4. So they broke through 38.20. They whopped out that liquidity. Now they've got 38.30 potentially.
Is down low again, and mortgage rates are low again. So this will be a process whereby we ideally we do our work in a way that where the housing market settles in a new place and housing availability and credit availability are at appropriate levels. So thank you very much.
All right. So there's another touch of they're trying to go for R4 here. They're trying to go for R4. They've got 38.30 that's above us. 38.32. They're holding R4 at the moment. I've got R5 in case we do breach. I've got R5 at 385.17. At 385.17. If we go over R4 and break the day's highs, I'm not sure where we really go. All right, he's done talking. That's it. No more J-Pow. Are they going to squeeze or not? That's kind of what we're looking at. All right, there's R4. There's R4. Another bounce off R4. Right up against 38.30. No, I did not. They're bumping up against R4 here, trying to go for 48.30. All right, a couple of scalps there. Right back to R4 green candle, dirty 30. So, all right, here's dirty 30. Where are they going to bring us? Where are they going to bring us? Under R4. All right. Am I going to swing anything overnight? I haven't decided yet. I think I'm going to close out the strangles that I took, the straddles, I'm sorry, for Apple and XLF. I've closed out the calls on the main big straddle, and I was trying to make up some for some puts. I've been scalping a few calls here against that. I'm okay here. I've got losses on the small straddles. My Apple straddle is down 5%. My XLF is down 8%. The micro straddle is down 31%. So all in all, I'm okay. Those are small positions. I'm pretty much scalped back to flat on the SPX, the big one. And now we're waiting to come above here. Right now, I'm going to bring up additional 38.20 calls just in case we squeeze over here and go through 38.50. We'll see where we go. I have no idea where this thing's going tomorrow. This was very wonky price action. We know they hit the pain trade on us today. And coming up. So I want this to be a lesson. I want y'all remember how confident I was going in today about a strangle. Obviously, every FOMC has been amazing. When I started to identify the IV, let's see what's going on here. If they eat up 34 to 38.30, we may go. When I started to identify the IV, I started to freak out a little bit. And I immediately said, okay, I'm going way lower on I'm going to go way lower on any position sizing. I said that in there. I wanted to be careful. And that keeps me safe. All that does is keep me safe. And now we're squeezing higher. Okay. I promised y'all yesterday I was going to show you my profits because I was expecting a big day. I can still show them to you, but it's not impressive at all. For me, it's pretty much breaking even. But green. But green. So if anyone held their strangles, they should be green right now. Anybody who held the strangle, it should be green right now, including the one that I closed out. I should have held, but I've been scalping against it. So this is what I was saying. It sucks, and we had to hold through a lot more crap than expected. But hey, this is no longer considered flat. We are now at 384. Held the call. Nice D, Trent. So the position worked. It just took a while to do it. If we break over here, we may fly to R6, which I've got 385.32. 38.50 it appears to be the top. Hey, my Apple strangle is now green. I'm sorry, straddle. The XLF is still red, 2.6%. Starting to become a pretty good day. Just got to wait a little bit. Hey, I want y'all to hang on to after the market opens or closes. I want y'all to hang on. I want to tell y'all something. All right, so we got here. Watch out for R5. We need to talk. I just gave you all the we need to talk text. No bueno. No bueno. I think they're going to go to 38.50. Bam. Pop-a-loppin'. Come into the office. Shut the door. Sit down. Shut the door. Anybody who's been in that, they go into the boss's office. He's like, sit down. Shut the door. June 15th. So that's gone. That's gone. The puts are gone. That strangle is whichever. That's gone. The puts are gone. Everything else is break even. Bada bing, bada boom. How you doing? I'm telling you, I know. I saw everybody freaking out. I tried to soothe you all. I know it sucked. Trust me, I was feeling the pressure too. And by the way, I got a couple of DMs about me talking about conspiracy theories. And I'm not going to tell this person, but I just what I'm saying is I'm not talking about conspiracy theories. Literally, the pain trade is the counter mass trade. You have to think about what's big money doing. Big money writes premium. They want to take the counter trend trade. What does everybody think is going to happen? They know they're going to be a big move. You don't think they know that we know that they know we know they know we know we're going to put on a strangle? Yeah, they know that. So what are they going to do? Pin it sideways. They're going to pin it sideways. And that's not conspiracy. Yeah, I was making jokes about them looking at, giving the old watch to J-Pal, but that's a complete joke. I'm just joking with you. I'm being colorful. So, but I understand. I just want to explain that because trust me, I'm not a conspiracy theorist. I do not like any of the political people at all. So, the pain trade, they're going to do what smokes the most people. What smokes the most people. Look at that big old red. Yeah. So as rough as that was pinning sideways, it was very hard for me to believe that they were going to pin it there the entire day. Uh, I was watching the VIX. The VIX began to fall aggressively. Did I blow up? No. In fact, look, I'll show you this. I absolutely killed it today. I killed it. Here, I'm going to show you my profits. I promised you I would. I've never done this before. I'm going to show you my profits. Look at this. Watch this. You ready to have your mind blown? Boom. I told you I was going to show you my profits today, and I did. That's pretty. I was hoping for a lot more than that, but hey. So, killing it today. Killing it today. I was up a lot more than that, but the Apple straddle and the XLF straddle reversed and went back to red. So, that's fine. Green day's a green day. The way I see it, any day that you are green, I don't care if it's 50 cents, you've done well. You've done well. Grasshopper. Now, if they manage to tank this all the way to the bottom, I'm going to make a killing because I'm still holding those puts from the big strangle. I doubt that's going to happen, but if they do, I'll make a killing. Can you imagine that? They did that? Yeah, I posted in the Discord. Oh, man. Whatchamacallit? The main strangle I took was just about break even. I'll get the exact, and I'll post the exact entries and exits. I closed out the call, so it's pretty much break even. I scalped it to get to green, and then I was up a lot more than that. But like I said, the Apple straddle I was up 2%. The XLF I was up 2%. They both have fallen back down into 9% and 12% red, so that kind of brought me down back a little bit. But yeah, it was a scrappy day. I mean, that's what happens, you know. But you know what saved me today? The market is always going to go against you when you're at your highest confidence. Well, not always. That's an extreme statement. But the worst time for the market to do something, they will do it. And you could say, you could chalk it up to whatever it is, market mechanics, whatever it is, but it happens. I'm telling you, I've been doing this long enough. So when I started to see the IV going up, I was sitting there messaging Lee Rat all day. I was like, hey man, IV's at 90%, IV's at 98%, IV's 130, IV's 150 or 148. So now, immediately I went into the market analysis and said, hey, I'm cutting down position sizes to way less than what I was going to do. So, Lee Rat's my boy, man. I got to talk to him. I did my push-ups today, my 3 max reps push-ups. We're doing that thing down in the fitness channel, by the way. If you want to be a part of it, come hang out with us in the fitness channel, way at the bottom left. All right. So my 3720 puts are down 99%. So they're the part of the strangle. I'm going to hang on to them. They're not going to. I'm just going to let them expire worthless. They're either going to expire big or they're going to expire worthless, which they're going to expire worthless. And that's it. So yeah. Are we doing a Murph? I can't do a Murph this year. This is the first year I've not done a Murph in a long time because my sciatic nerve is screaming. But it's almost better. Those steroids I took, the doctor steroids, not the bad steroids, helped greatly. But I still have a little bit more to go. I still want to do it though. I may do a late Murph and pour one out for my boy, Mike Murphy. All right, 243. So here, this is what I'm going to talk about. I thought about this all night. we talked about philanthropy yesterday. Talked about philanthropy today. So I created a philanthropy to donate to the Vanderbilt Children's Hospital because if there's someone to help, I think it's the kids. As you all know, that my mom we just found out, is battling cancer, and it appears that she's not going to be with us for another couple of months. It's a rough situation, so I think the Lord put it on my heart to do a philanthropy to help people, to donate, and I've chosen the children's ward to do that. The reason being was because our family was at the cancer ward to be there for my mom, and while we were there, we saw we went out to the little lobby area where they've got all the shopettes and where they have in the hospital, and they've got the Ben and Jerry's ice cream, and we were there just when when all the kids came out of the cancer ward, and they're all they're the cancer ward, so they're they're in a lot of pain. They have their head shaved, they're in their wheelchairs, they look bad, but when they saw Ben and Jerry's, man, their eyes light up it's like they were normal kids. They were happy. So it's like, man, if something as simple as ice cream can make those kids forget about the pain they're in and be happy, I think we need to give out to them. So I created a philanthropy, and I made a goal of $25,000. I want to get there before the end of the year. So, and I'm going to make this pledge to you. If we can get there, I will match up to 25 grand before January 1st. So if you all can donate and get it up to 25 grand, I will match it and pay it and get it up to 50. So I figured right now, between the two of us, we've got about 1,100 people watching. That's less than $25 a person. So it's up to you. That's up to you. And if we can get there before the end of the year, I'll match 25 grand and make it 50. And I'll put the affiliate channel. The philanthropy link is in the affiliate here. Not the affiliate. I'm sorry, philanthropy channel. Philanthropies, right there. Bam. Here, I'll give this to you too. Copy link. I'm going to post it in the YouTube too. Don't feel obligated. Obviously, completely voluntary. But there you go. You can leave an anonymous donation. I see none of that money. That money is no way affiliated with me. That goes straight to them. I'm not a middleman there. It goes straight to them. So, there you go. Will you donate 100K? Will I match 100K? Here's what I will do. In addition to the 25K, one of these days, when I think it's going to be a big day, I will dedicate all my profits on the day to it as well. I don't know when that'll be. Like I said, we'll do this throughout the entire year. So, but there you go. Yeah, that's the day. Well, if I do go negative on that day, then I'll do another day when I'm positive. So. I was hoping to do this when we were all making a bunch of money today, but it is what it is. So. .69%. Nice, Damien. Well done. We got 13 minutes. What do you think now about the market doing this? I mean, it doesn't surprise me. I've been doing this long enough where it doesn't surprise me. I'm telling you, you can feel it. You can feel it. Like when you could feel the tension when you're sitting there waiting for J-Pow. Just be quiet. Just be quiet and we'll move. And he kept talking and talking and talking. I get it. I get it. So. feel you. All right, so these straddles are down 10%. I'm not sure what I'm going to do with these things. I think I'm going to go ahead and close them. Given today's unexpected turn of events with the price action, I think I'm going to go ahead and just wipe the slate clean and refresh into tomorrow. I'm green on the day, go into tomorrow. I will say, though, I know it sucks, but if we would have held those straddles, everybody should have been green on those straddles. Or the strangles, whichever. Long futures for Friday. Nope. However, PJ, Thursday afternoon, I think I may take some long calls, swing calls. In addition, I'm not sure. I'm out to lunch on whether I'm going to do a strangle or a long call, but we'll see. We'll discuss that tomorrow. No, you're good, Mike. I appreciate that. Yeah, that's fine. So, thank you, Maddie. I appreciate that. And in no way is the philanthropy obligatory. So just, completely, if your heart decides you want to give, then give. Regardless, I'm giving 25 grand. So y'all can be with me or not. 378.88 coming on down. There's R2. Hey, the doorbell rang. That may be my new screen. Thanks, Mark. Appreciate that. Come down to R2. Can they tank this in 9 minutes? No, they can't. With the huge drop after the day J. Powell talked last Fed meeting, do you think there's a chance for a big move in futures tonight? Man, honestly, I don't know. This has been a very erratic FOMC, and it looks like they're going to finish it pretty much flat for where FOMC started. First time that's ever happened in the modern FOMC era. So, yeah, crazy stuff. That's right, Jonathan. Yeah, buddy. Yeah, buddy. Oh, thanks, Tim. Appreciate you being here. Appreciate you being here. TLT is skyrocketing. Yeah, man, Lee Rat, man. That's why. Strong character, man. He's an awesome dude. Awesome dude. I'm not sure what we're gonna do here. Yeah, sorry about that. Here's book map. So book map right there. Yeah, it looks like they're gonna pin that right there. So we got 6 minutes left. I'm gonna hang on to the strangle for XLF and Apple. I think tomorrow is gonna have a more explosion of movement. So I'm gonna hang on to all the straddles, the XLF and the Apple. Hanging on to those. Uh, all I've got on SPX, I've got the June put that I may go ahead and cancel. I don't know. I'll hold that one more day, and that's it. The other two is just the put leg for the straddle, and then that's it. So yeah. Oh, thanks, Maddie. I appreciate that, man. Yes, I'm sorry for your loss. I know it. Yeah. What time do you start your morning market analysis? I post the analysis before 9 a.m. Eastern time. I try to do it right at 9 a.m. I start streaming about 5 minutes before, so we can get up to speed on all the action. Do you think buying a straddle or strangle overnight is a bad idea? I mean, I'm going to hang on to my XLF and my Apple, so we'll put it that way. What do you make of the giant 3930 level? That stupid IBKR thing. I hate that thing. Yeah, TLT is going nuts. So that will move the markets there. Am I doing a willing to do an after hours voice stream? I could do one a little later. If y'all want, we could jump on later tonight. But after, I'm gonna hop off the stream here and hang out with the fam for a little bit. But if y'all want to do it, y'all can do one later. Steve Burns, yeah. He just posted that 20% down and 1.5% up is not bullish. Uh-oh, hot sauce is joining into the fun, and the fitness fun. All right, so that's about it. That's going to be the close of the day. Close of the day. So, yeah, got to go do my pull-ups too. Yeah, I hope you did learn a little something. I know that was unfortunate. It was unfortunate, but you know, their market's going to make you work for it. More times than not, the market is going to make you work for it. So, if you are, right there, it didn't just shoot up like normal. We had to sit through about an hour of consolidation, but all the strangles and straddles we took should have been profitable if you held on to them, because we did rally from, the flat, I'll call it flat, from 37.71 up to 38.40. That's 80 points. But a lesson in patience. We have to watch the environment and position sizing. Position sizing. I hope position sizing entered into your brain. I should learn to take profits too, because I was up big time at the first spike, and then that one candle wiped the strangle out, almost down to break even. The second candle, I got out of the calls there, and I was hoping to get the puts on the way down. Obviously, that didn't work out. So it would have been nice if I would have executed right at the top, but for me, I thought we were going to go up at least another 30, 40 points. Obviously, that didn't happen. So. What are all the crazy people the past couple of days, man? Jeez Louise. $39.50 closed Friday. That's what Justin says. Yeah, buddy. Yeah, this chat does need a mod. Yeah. Brian, DM me. DM me. We'll figure it out. All right, y'all. That is the name of the game. TLT is up to 110. ES is pinning 37.90. SPY is 380. So let me know if you got any questions about anything. If you want to shoot me a DM to figure out what happened here, cool. Hit me up. I would prefer you post it in the channel so everybody else can learn. But that's it. I will see y'all. If you want to do a stream, we'll come on a little later and we can talk about a position today. And we'll be it. So thank y'all. I will see you all bright and early in the morning for some trading. I'll see how we follow on with the price action today. Y'all take it easy. I'm out.